I've just found something in the weekly chart for Bitcoin which has never happened in the history of Bitcoin. If this pattern plays out, we could see an explosive bull market. As you can see here on the hourly, Bitcoin is consolidating above 30,000, showing some great strength. And we've got a really important macro week coming up. I'm going to show you that and a lot more. Smash up likes. Don't forget to subscribe. As always, check out the links in the description to Bybit or BitGet if you want to buy or trade any cryptocurrency. Come on to the weekly chart, guys. Turn on your 50 moving average, turn on your 200 simple moving average. And what do you see, guys? This is a phenomenon in the crypto space called golden crosses and death crosses. And if you go back here to this period here, we had a death cross earlier this year where the smaller time frame crosses below the longer time frame, signaling a move to the downside. Now, the strength from Bitcoin in the week straight after here, in this powerful week, and obviously the week we had last week, has now meant that we are narrowing the gap. This yellow line has U-turned, it's bottom out, it started curling back up, and we could be weeks away from a very important bullish cross called a golden cross. And here's the crazy thing, this has never happened before. If you go back in history, we've never had it where the yellow line had to go below and back under through the longer term 200 moving average. So this could be a powerful, explosive catalyst. And one thing is for sure, being in the crypto market right now feels hugely exciting. You only have to jump onto the Fear and Greed Index. It's caught up a little bit today down to 55, but we were back up to 64, 69 just a couple of days ago. And you're starting to see the interest come back into this market. And of course, the BlackRock excitement around them filing for their spot Bitcoin ETF is leading to a lot of major institutional and high net worth individuals trying to front run the potential move here on Bitcoin. Of course, we're getting closer and closer to the halving as well. If you take a look at this is BITO, which is the Bitcoin Futures ETF. This saw a record spike of 65 million flow in just 1 week. This is a huge record right here on Bitcoin for this year, and a big spike up, and it's not seen anything like this in the last 12 months. Just look at this. This is the last 12 months chart. No inflow has come in like we've seen come in after BlackRock filed for the ETF. This is major. In the institutional game, this is major that BlackRock are heading down this path and all the other institutions will follow behind, right? And this is a huge step for crypto. And this is why we're seeing a lot of the bullish intent. Now, with that said, let's now come back into the daily, into the hourly chart, in fact, here, because I want to show you something important, because we are consolidating here. You can see the Bitcoin price action moved all the way up here to 31,400, but then it's kind of cooled off. Now, the good thing about that is we've got a slight higher high, but the bad thing is we need to clear past this level. If we cannot clear past this level, we are forming a big M pattern, which I shared with you yesterday. So when you look at this on the hourly, you saw we consolidated into our first triangle, broke out really good, consolidating into another triangle now. We need to break out and get above this peak here of 31,400. Very important. Otherwise, if we break to the downside, you're looking at price targets even coming down to the next support level at 29,000. And again, if that happens, you'll quickly start to see fear come back in again, and you could be setting yourselves up for lower prices. Now, for me, I made my video a couple of days ago saying, guys, I am not buying this extended price action. Now you've seen here, it's consolidated to the right-hand side, right? Had its big extended move here. Look at the gap between the EMA ribbon and the price action, right? Big gap here. I don't like buying when there's a big gap here. As it consolidates to the right-hand side, much better place to buy into that 4-hourly EMA ribbon. Even better if you've got the patience. You want to be doing the same on the daily chart. Look how extended we are on the daily chart. Huge extension. Now, you don't always necessarily get a correction on the daily chart. Sometimes it could just bounce to here, maybe at 29,000, and off it goes on its next leg, right? In which case you were like, oh, waiting here at the bus stop and saying, oh, nobody came pick me up here. There's no guarantee when you've had a huge move like this and a big fundamental shift like we saw with BlackRock that it's necessarily going to come all the way down here to 28,200. And that is why, as it starts to turn, I start nibbling on my way to these levels. The lower we get, the more I'll nibble. And if we do get lucky enough to come back to the EMA ribbon, fantastic. Okay, that's what I'm looking for here. One thing is for sure, I don't chase these green candles. There's no need to. The fear will come back. There'll be something like an inflation figure or something else that will bring fear back into the market, and then I'll take that opportunity to buy in red. And that's the key. The reality is what the inexperienced investor or trader does is they assume the good times will always last. They will assume that this moment here is always going to stay green and I need to get in now because I'm going to miss everything. No, the fear always comes back in. And so when it's really greedy outside, I want to be fearful. And when it's really scary outside and the blood is on the streets and nobody's buying, that's where I need to reprogram my brain to do my buying then when nobody else wants to be buying. And we've got some critical catalysts coming up this week, guys. We're going to kick off on Wednesday and Thursday with Jerome Powell speaking about monetary policy. So obviously whenever Jerome Powell speaks, the market can move. So expecting the NASDAQ, expect the S&P and therefore Bitcoin as well to move on that news. We also on Thursday have an important US Q1 GDP figure which comes out as well, and then that leads us up to Friday, the most important data, which is your PCE inflation. The Fed's most preferred version of inflation comes out on Friday. So we have some important macroeconomic catalysts which could set the trend here for Bitcoin this week, and we need to pay attention to those. So that's the levels I'm looking out for here. Now that's not the only thing. Right? This week, we get a really important weekly candle close, right? We're now closing here. And the problem we have here with this close is as follows. Hopefully, you guys can see that we had a big move here up towards 31, and then we came down, we go back up again. If we get rejected again here on the weekly, we're forming a big, ugly M pattern. We do not want to be forming an M pattern, right? That's a reversal sign. But then the other thing we want to look at is we also get a monthly candle close. We get a June monthly candle close this week. We also get our quarterly candle close. Q2 finishes this week, and obviously half one stage finishes as well. So when you jump up here into the monthly candle, you can see this was a good engulfing candle here on the monthly candle. So it's very important we can continue to keep our gains over the next couple of days, because what we've managed to do with this one big 11% candle is eclipse the 7% month we had last month. So this is really good. SEC come attack us, we eclipse it with a bullish engulfing candle here on the monthly chart, and that could set us to keep us above our monthly EMA ribbon and start to form our move here now to the upside back towards all-time highs. Now zooming back down, I do want to remind you of the important patterns at play, and the main pattern I want to share with you guys is this one. And that is our important cup and handle pattern. You guys have been monitoring this. I've been sharing this with you guys for ages as we were forming the handle pattern here. And you can see we are at the neckline. It's critical that we get above this neckline. Now, it's no surprise that it's taking time. I expected this to take time. The gap was here. We filled the gap up towards 31. Great. Now, 31 is an important level. Break above it, and I expect us to gap again with a nice, powerful move heading us up to this 45K region. There's very little resistance here, guys. We drop so quickly, there's very little resistance. So I've said this plenty of times. Do not get caught out saying, I'm going to get in later, I'm going to get in later. You're dithering right now to try get yourself a little bit of a better price. Could be the difference between you buying at 30 and then it running away from you, getting to 37, 38, and then it's going to be difficult for you mentally to buy, and you're going to end up sitting on your hands and the price is going to run all the way up to 45. So you need to ask yourself your question. Where is my conviction level? Do I believe in crypto? Do I want to be in crypto for the next cycle? And if the answer is yes, don't dither about 29, 29 and a half, 30, 31. Just get your Bitcoin in, hold it, because the reality is the macro goal is you expect Bitcoin to outdo traditional finance. You expect it to outdo the inflationary aspects we see in fiat currency. You expect the all-time high of 69,000 is nothing. Bitcoin should get to 100,000, 500,000, 1 million people call for, right? And if you believe in that longer-term thesis, does it really matter if you buy at 29.5 or 30? Hope you guys enjoyed this video. If you appreciate these condensed style videos with all the alpha you need packed into a short video, make sure you let me know in the comments. Don't forget to go watch this video on alt season, and I'll also link up another video which explains which altcoin narrative is exploding right now, because if you're not careful, you could miss out on this big theme. Thanks for watching, and I'll see you in the next one.